Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So on the Bitcoin market, you can see that the changes come slowly. In fact, this is a weekly chart, and you can see that this week we have this really small candle that stands as inside week for the previous one. So very tight consolidation. It's almost nothing to say about this on the weekly chart. The one thing that might be said here is that, well, potentially this pattern is still could be formed. Here we see some two downside weeks. They are not really strong, but that might be just the beginning. So we could see what will happen. Appearing of this pattern might be really great assistance for attempt to go long, because we will get the clear pattern and the area where we will take the position around 90 to 93. It might be really great. So if we will get it, it will be really big gift for all traders, all bulls who are searching chance to go long. But it is still the long way until this will be formed, and not the fact that this pattern will be formed at all. So let's keep watching. On lower time frames, the picture stands very similar to what we saw on Monday. So daily chart hasn't changed much. So in fact, you've got just these 3 sessions, almost stands in a range of this minor upper direction. So we could say that some kind of the minor consolidation is forming on the daily chart. So not really a big deal. Our trend remains bearish. So here we do not have a lot of events. Potentially it looks like the flag consolidation after the drop. That's why we could say that, well, theoretically it is bearish. So because this flag, as you know from the classical school, is a continuation pattern. Once it has been formed out to the downside direction, trend remains bearish. It's more chances that we will get some further continuation. For this week, since the oversold stands around 97, 98 area, we could say that probably 97, 98 will be the floor if market will reach it at all, because market is very lazy in this moment. In what particular way it might happen? So as we mentioned on Monday, one of the patterns that we're considering, it might be the hand and shoulders pattern. So here you could see that since our recent talk we thought initially that market should reach the XOP target, this ABCD pattern, and touch the neckline, but currently you could see that this has not happened. And in general, based on the sequence of these lows, here and here, once again, you could see that probably the neckline has to be drawn in a different way. So it probably should be something like this. Here's some things exist that's maybe not quite bearish. In particular speaking, the fact that market hasn't reached the XOP. And instead of that, it started this upward pullback. This is not normal for market in general, so especially when it doesn't have any barriers between the price and the target. So major support stands in 102 area, agrees with the XOP. Between this point and that point, there's no really important things, no support or something, but somehow market still stand here and start upward action without touching the XOP. Well, that's the thing that may be not quite bearish, and we will see what will happen. But for now, I wouldn't call this overall combination as a bullish. So here we do not have yet any signs of the failure of this potential pattern. If somehow market stops here, start moving higher, returning back to the 109 area, for instance, that might be the first sign of the failure. In this case, indeed, we could say that yes, probably we will get the upward breakout. In this case, the daily flag here is also be broken up. Market will start to return back to the upside. That might be the first sign, but for now I do not see any signs of the failure of the bearish context. On the hourly chart, you could see that the line that we have specified previously that splits 2 trading ranges stands above as a form of triangle. For standing below is the next consolidation, has not been broken. So market just tested it, failed to break it up and start dropping down. So here's maybe a round top is forming, which is also not bullish sign. And in general, you could see that here is also probably we could draw kind of the trend line, though here as it stands slightly higher from this one, short-term trend line. Well, it doesn't fit perfect, but in general, if we will draw it in this way, so probably we could see that something like this exists still. That prevent market from the possible upper breakout. So that being said, currently, if you would like to take the short position, probably you place stop above this area. But I'm telling right now, just evidently, that the bearish signs here are also not really great. So yes, overall context remains bearish, but context is relatively weak. Price action is gradual, slow. We do not see any thrusting action. So for a trading process, it carries lots of risks. So that's why I think about it twice before you decide to take the position here in general. But by lesson, in theory, context remains bearish. So if you would like to, you could try to trade it. For the bullish position taken, we probably need to get some clear signs of the bearish failure. As I said, one of them it might be if market return back to some upper direction above the 107, bet it's somewhere close to the 109. And if we'll see some signs of the thrusting action, it's all the better. But for now, we do not have it. That's why no reasons to cancel the bearish context yet.